Hi everyone, today we're going to be talking about DermTech Incorporated with the ticker symbol DMTK. First things first, this is no penny stock, but it is small cap by definition, making the stock very volatile. The price is currently $49.77 a share at the time of recording, but I think that this company is making something really special and it's worth looking into. In this video, I'll start with giving a company overview, then I'll give a descriptive analysis, a fundamental analysis, and then a technical analysis. So you're going to want to stick to the end of this video to understand the big picture behind why you should or shouldn't invest in DMTK. Also, a lot of time goes into making these videos, so if you appreciate them, then be sure to hit that like button and subscribe to the channel. It helps us out a lot. So starting off with the company overview, DermTech focuses on the non-invasive diagnosis of skin cancers, most importantly melanoma in the case of DermTech. Skin cancer is one of the most common cancers worldwide, and as you can see from some of these numbers that we're talking about incidence in the hundreds of thousands per year, with millions of diagnostic tests performed. Since DermTech focuses on diagnostic tests for skin cancer, this provides a very volume-heavy market for them to break into. To this day, the gold standard for ruling out a diagnosis of skin cancer is a skin biopsy, in which the physician surgically cuts the affected skin sample and then visualizes it under the microscope for any abnormalities. Also, note that for every 25 skin biopsies taken, only one of them is actually positive for melanoma. Also, look at these two pictures on the left and on the right. The left is non-cancerous, whereas the picture on the right is cancerous. It's so difficult as a pathologist to look at these slides and actually rule out the diagnosis of melanoma. So given all this, you can imagine how problematic this can be. Firstly, the act of cutting off skin to be used as a sample is incredibly painful for the patient and also subjects the patient to infections and a whole host of other complications. Also, with such a low positive test rate, it doesn't make much sense subjecting 24 out of the 25 negative patients to unnecessary pain. And lastly, since the pathologists are viewing these biopsy samples under a microscope, it brings up the possibility of human error. So this is where DermTech comes in. DermTech is working on a number of products, but their primary product is the pigmented lesion assay, or the PLA test. This will essentially target all the issues we stated earlier with the traditional skin biopsy. The PLA test is non-invasive, accurate, and also eliminates the possibility of human error. So how exactly does it work? Once a doctor has identified a suspicious skin lesion like a mole, it's as easy as placing one of these stickers on the lesion, rubbing it to make sure it sticks properly, and then lifting it off and sending it to their labs for them to test the DNA of the skin cells that were peeled off. The skin peeled off is so minimal that it doesn't cause harm to the patient, and since a pathologist isn't manually looking at the skin under the microscope, there isn't the possibility of human error. The computer in their labs is looking for markers of melanoma within the skin cell DNA. And their test also has a negative predictive value of 99%, meaning that there's a 99% probability that a negative test means that you don't have the disease. So why is this such a big deal? Well, DermTech has taken a test which is historically known to be invasive and prone to human error and turned it into something that's relatively easy to use for both the physician and the patient. Not only is their test more accurate, but it also allows physicians to detect melanoma a lot earlier than a traditional biopsy, and it's also a lot cheaper. You can see here that the 5-year survival rate for melanoma when detected early is 98%, so early detection can really make such a huge difference between life and death for these patients. So now that we understand how DermTech is innovating the skin cancer diagnostic space, let's look at the big picture. Remember how I said that they were working on all these diagnostic mediums? Well, the PLA as well as the PLA Plus are in their commercialization stage. The remaining diagnostic mediums in their pipeline, along with the PLA and PLA Plus, can bring DermTech's total market opportunity to $10 billion, which DermTech can break into. The PLA Plus is basically the same as the regular PLA, but they're including more melanoma gene markers of interest in the gene analysis. This aims to increase sensitivity of the test to 97%. The Luminate is a type of risk assessment tool where patients can get a UV damage score. Think of it as similar to a 23andMe type of tool where people can send in a sample to their labs and receive a score of how susceptible their skin might be to skin cancer. And lastly, carcinome and CTCL are both similar to PLA but for non-melanoma skin cancers. So with their current diagnostic mediums, they're only covering a short portion of the market opportunity that they can capture. So once all their products hit the market, they can be a whole lot profitable and reach a wider audience. Additionally, DermTech has a very strong intellectual property portfolio. This was taken directly from the SEC 10K form, As you can see, they have a number of utility and design patents that are focused on their sample collection system and other methods of diagnosis. In terms of their competition, DermTech is the only company out there which offers non-invasive genomic testing in the field of dermatology. Now, there are other companies in the space that do similar things, but they aren't exactly non-invasive. Some notable companies include Myriad Genetics and Castle Biosciences, both which do genetic testing on tissue biopsy samples to detect melanoma. Now, this is an invasive method since you're taking a tissue biopsy sample from the patient. Additionally, some companies have developed medical devices and imaging tools to detect melanoma. However, the issue that comes about is the fact that they don't integrate well with clinical practice. Some notable companies include Strata Sciences, which created an FDA-approved device which uses wavelengths of light to capture the lesion to see disorganization and whether or not the patient will need biopsy. Now, this test has a specificity of less than 10%, meaning that if you have a positive test, only 10% of the time will it actually be melanoma. The other 90% of the time, it could be something totally different. Sybase AB and Verisant Technology have both come out with spectroscopy machines which assess melanoma, and Welch Allen and Caliber ID manufacture dermatoscopes and enhanced microscopes which provide a magnified view of the skin lesions. But none of these competitors are really offering a non-invasive genomic testing of melanoma or any skin samples for that matter. Okay, so now that we've identified what DermTech does, the products, market opportunities, and competition, let's try to look at some of the numbers starting with the descriptive analysis. At the time of recording this video, DermTech is currently trading at $49.77 USD a share and has a market cap of $1.29 billion. It has a total of 18.93 million shares outstanding and a float of 4.89 million. Average volume is 1.47 million and current volume is 2.1 million. They have a float short interest of 31.67%, and all this information is taken directly off Finviz. So, having a market cap of 1.26 billion, DermTech classifies technically as a small cap stock. As such, it is at high risk for higher volatility. However, it does hold a relatively higher growth opportunity than a large cap stock. Additionally, due to a relatively low float to outstanding shares ratio, we are able to infer that insiders hold a large percentage of the stock. Now, this is a good sign since the insiders' belief in the trajectory of the company. However, it can pose a risk as well since insider buying and selling has a large effect on the stock price. They've also received 2 analyst recommendations just last week, both with a buy rating and price targets well above what the stock is currently trading at. Now, I know it's best to take analyst recommendations with a grain of salt, but with a history of buy ratings, it does instill some confidence investing into this company. Getting into some fundamental analysis, a lot of it comes from the financials of the company, and this is where DermTech isn't doing so hot. DermTech currently has a negative earnings per share (EPS) in 2020 of negative 2.08. As a result, the PE and PEG ratios are not applicable. The negative EPS value should not be of any surprise, considering that DMTK is in the early phases of growth and the pandemic has also affected their business model. Additionally, the 2020 EPS value of negative 2.08 is an improvement from their 2019 value, which was negative 2.81. One thing that's also important to note is they mention in their 10K report that based on their current business operations and additional 2021 financing, they would be able to sustain themselves financially for the next 12 months. But understand that they do expect to raise additional capital through equity offerings, debt financings, collaborations, or licensing arrangements in order to keep their operations running. Understand that investing in this company does come with risks, and while I've provided a small fraction of the fundamental analysis, I'd urge you to do some due diligence as well to see if this company is worth investing into despite their financial situation. Remember, I'm not a licensed financial professional and this is not investing advice. This content is purely for entertainment purposes. Given their current state of affairs, it might be worthwhile playing into the dips short term in order to ride the wave of momentum and capitalize on catalysts for this company, but investing in this company for the long term might hold some risks. In terms of a technical analysis at this point in the market, for the most part, most stocks are going to be a great opportunity to buy since there's been such a big pullback, and DermTech is no different. They hit all-time highs of about $84 a share on February 22nd, and they've been dipping ever since. On the 3-hour chart, with the MACD crossing over and the RSI just coming out of oversold territory, we're starting to see signs of a reversal, and it may be a good time to buy into this stock if you're considering it. So there you have it, my take on the current state of affairs of DermTech Incorporated. I hope that this video was educational and gave you a bigger perspective on the current standing as well as the future implications of this company. As a disclaimer, I'm not invested in this company, but I do see some value in what they're doing. I truly believe that DermTech is changing the space behind skin cancer diagnosis, and it's a matter of time before clinics start incorporating the PLA test. Once again, I'm not a finance professional, and this is not financial advice. It's purely for entertainment purposes. If you like this video, be sure to hit that subscribe button. More videos like this coming your way, and you don't want to miss out. I appreciate the support you guys have been giving me. It means a ton. So I'll catch you guys in the next one. Peace.